Welcome back, everyone, to the deep dive. We're looking at SoundHound AI today, and it's really been on a wild ride.
It really has.
A perfect example, I think, of how quickly this whole AI space can, shake up the market.
Definitely.
So what can we learn? I mean, a company shoots up over 800% in 2024.
Incredible numbers.
Only to plunge, more than 50% from its peak in 2025? Our mission, as always, is to dig into the sources you've shared with us, pull out the really important bits, and give you a shortcut to being properly informed on this pretty fascinating story.
Sounds good.
Okay, so let's start with that drama. An 836% gain in 2024, then bam, down 55% from the all-time high just this year. What's really driving that kind of, volatility?
Yeah, it's interesting because a huge chunk of that roller coaster, you can pretty much tie it straight back to Nvidia.
Oh, right. The Nvidia connection.
Exactly. So early 2024, Nvidia reveals they've invested in SoundHound AI, and the shares, they just went sky high.
Like a validation signal?
Totally. Investors saw it as this massive stamp of approval, proof the tech was legit. Then, fast forward to early 2025, Nvidia discloses, hey, we sold our stake. And, you saw what happened. The stock took a major hit.
Wow.
It's almost like the market gave SoundHound this temporary celebrity endorsement.
Right.
And then just as quickly yanked it away.
That really highlights something crucial, doesn't it? But let's unpack that a bit. Why are investors, even smart ones, so quick to just follow a big name like Nvidia? Does this mean SoundHound is just inherently more volatile now, regardless of its actual business?
Well, it's kind of human nature, isn't it, to look for signals, especially when things are new and complicated, like AI often is.
Sure.
But Nvidia jumping in and then jumping out so fast, it really hammers home a key lesson. You absolutely need your own investment thesis.
Right. Don't just follow the leader.
Exactly. Riding someone else's coattails? I mean, even a giant like Nvidia, it can lead to a seriously bumpy ride.
Yeah.
You have to do your own homework.
Okay, so bearing that in mind, let's try and look past the Nvidia headlines. Let's dig into SoundHound AI itself, the core business. Why are some investors still really, really excited about it, even after that big drop?
Yeah, okay, so the core is voice assistant tech. They supply it to car companies, restaurants, a bunch of other industries too.
And they've been around for a while, right? Like 2 decades.
Yeah, leveraging, like you said, 2 decades of experience. They're not new kids on the block in terms of the tech development itself.
So definitely a first mover in some ways, but the sources say their big revenue growth, that was really kicked off by the whole AI revolution recently.
Well, that's the catalyst, absolutely.
And the numbers, they really do jump out. You see 85% full-year revenue growth in 2024. Okay, impressive.
Very.
But then Q1 2025, a stunning 151% year-over-year growth. What's behind that acceleration? Is it just the general AI hype, or is there something specific SoundHound is doing?
It's probably a mix of both. The AI boom is definitely the wind in their sails. But the bullish case gets really interesting when you look at the market size they're targeting.
Yep.
Management's estimate, a total addressable market of about $140 billion.
Wow, $140 billion. That's huge.
It's massive. And right now, SoundHound, they command like far less than 1% of that theoretical market.
Right. It's a tiny share, giant pond.
Exactly. It's like, finding yourself in a tiny boat on this huge ocean of opportunity. So you've got this really head-turning growth rate combined with a massive runway that suggests potentially many years of growth still ahead.
Okay, growth story makes sense. Huge market. But what about making money? Our sources say management believes they'll hit profitability by the end of this year.
On an adjusted EBITDA basis.
Right, adjusted EBITDA, which sounds good, but then you look at the trailing 12 months, a massive net loss of $188 million. Is that profitability goal actually realistic? Or is it maybe a bit optimistic? What are the big hurdles there?
Look, it's definitely an aggressive target. No doubt about it. The good news, I suppose, is their financial footing seems pretty solid for now.
How so?
They've got about $246 million in cash on hand and, importantly, no debt.
Okay, that helps.
It does. So, yeah, they're burning cash now, absolutely.
Yeah.
But with that kind of top-line growth, if they can keep a lid on operating expenses, then, the path to breaking even or hitting that adjusted profitability, it starts to look clearer.
Right.
So, yeah, the bullish view is basically fast-growing company, massive industry, financials seem to be trending the right way, even with those past losses. Could be a winner.
Okay. Bull case clear. Impressive growth, huge potential market, path to profit may be visible. But let's play devil's advocate. What are the risks? Why might this not be the stock for everyone?
Fair question.
One thing SoundHound talks about is their competitive advantage being white label. They work behind the scenes, right? So the customer's brand stays front and center.
Yeah, they push that angle, but you have to ask, how much of an advantage is that really?
What do you mean?
Well, think about cars. Auto manufacturers, they don't seem to have a problem putting other brands in their vehicles. You see Sirius XM radio, JBL speakers.
Good point. Harman Kardon. Bose.
Exactly. So is the customer really focused on who provides the voice assistant? Or just that it works well? The capability might matter more than the hidden brand.
But couldn't you argue the opposite? For something as core as AI voice control, maybe car makers would prefer to brand it as their own, like Ford Voice or whatever, rather than putting Google Assistant or Alexa front and center. Couldn't that white label approach be smarter for this kind of tech?
It could be. Yeah, definitely. For companies really protective of their brand identity, that might appeal. But the counter-argument is strong, too.
Which is?
Customers often like the familiar ecosystems. They trust Google or Amazon. They know the updates keep coming. The features get better across all their devices. Plus, while SoundHound boasts that, big head start in AI voice.
The 2 decades.
Right. Even their own management admitted on the Q1 earnings call that the recent boom in generative AI, it's seriously ramped up the competition just in the last couple of years. Their lead might be shrinking.
So the landscape is changing fast.
Very fast. And that competition, it's only going to get tougher, especially from the tech giants. We're seeing this nascent trend of agentic AI.
Agentic AI, meaning?
AI that can make more autonomous decisions for you, sort of like a real personal assistant, acting across different apps and services.
Got it.
All the big players are pouring resources into that, and that puts them on a potential collision course with what SoundHound does.
Yeah.
Think about Alphabet, Google, their Android Auto platform. It's already getting a lot of attention from Ford, from General Motors, major players.
Okay, so the competition isn't just theoretical. It's actively making inroads with SoundHound's key customer base.
Precisely.
So wrapping this up, what's the main takeaway from this whole deep dive? It sounds like it's not that SoundHound is, doomed or anything. The core business seems strong. Growth is impressive.
Right. The growth is real.
But maybe the takeaway is that the path to that huge $140 billion market, it's not going to be an easy walk in the park. Competition is real, and it's heating up.
That's the crucial point, I think. For anyone looking at this, you have to remember that massive opportunity. It won't be free from competition. In fact, it's likely competition will only intensify. You really have to weigh whether SoundHound can truly hold its own against, the biggest tech companies on the planet.
So if you're listening and you really believe SoundHound has the secret sauce, that they can challenge the giants, then maybe the stock looks like a cautious buy after that big 55% drop. A potential opportunity.
Perhaps. Cautious being the key word.
But the sources also float another idea, right? Just waiting on the sidelines for maybe the next year or so, see how this competition actually plays out.
Yeah, that's the patient investor approach.
Because if that market opportunity really is as big as everyone thinks, this story has a long way to go. There's maybe no rush to jump in right this second.
Exactly. Let things shake out a bit, see who gains traction.
Okay, so that leaves us, and you listening, with a final thought to chew on. We've got SoundHound's really significant growth, this huge, ambitious market opportunity they're chasing, but also this looming, intensifying competition, especially with agentic AI coming down the pipe.
Right.
So the question is, what does SoundHound's competitive positioning really mean for its long-term chances? And maybe more broadly, how does analyzing the situation influence how you think about evaluating other emerging companies fighting for space in these really dynamic, fast-moving industries? Something to think about.